Hi, my name is Cherilyn Williams, and I'm a realtor with eXp Realty for Illinois and Indiana. And today I want to talk about the different types of home financing programs that are available to home buyers. Last week I discussed the initial stages and requirements in order to purchase a home, so I felt it would be appropriate to make a financing video. Okay, there's 4 types of financing programs that are available to home buyers. We have the FHA, the conventional loan, the veterans loan, and the USDA loan. Now, the most common out of these are the FHA and the conventional, so let's compare and contrast the two. FHA stands for the Federal Housing Administration, and this is managed by HUD, or the Housing Urban Development. The FHA program is backed by the government. The government created this program for home buyers that may not have a lot of money to put down for a down payment, or their income is not that high at their employment. This program was designed to promote wealth for these families and ownership and to stabilize neighborhoods. The FHA requirement is 3.5% minimum for a down payment, and your credit score only has to be at a 580. The disadvantage of the FHA is that it requires what they call PMI, or primary mortgage insurance. And this is a payment that's tacked onto your mortgage payment each month that you have to pay to your lender that insures them in case you default on your home loan or your home goes into foreclosure. There really is no benefit to you as the buyer, but it protects your lender. Another disadvantage of the PMI is that it stays on the entire loan term. So if you have a 30-year loan term, it will stay on your loan for 30 years, unless you decide to refinance and get a conventional loan or some other type of loan. Another disadvantage of the FHA is that it has stricter requirements for the condition of the home. So if the home has any structural issues, foundational issues, the mechanicals are a mess, there's peeling paint, broken windows, an FHA appraiser and inspector that comes out to inspect the home from your lender will not approve this loan. Another disadvantage is if you're an investor, you cannot obtain an FHA loan if you're an investor. You would have to live in the home as an owner-occupant for 1 year before you could decide to rent the home out, which could be a major disadvantage. Now let's talk about conventional. Conventional requires home buyers to put down 20% or more, or even in some cases, you can put down as low as 5%. But like the FHA, if you put down 5% on the conventional, you have to have that PMI insurance again. Now, the only difference is on the conventional compared to the FHA is that if you have the PMI will fall off once you reach 22% equity in your home or a 78% loan to value ratio. And you don't have to worry about it staying on the entire loan term. It falls off immediately when you reach that 22% equity. Another advantage of the conventional loan is that investors can, once they buy the home, they can rent it out immediately. They don't have to be an owner-occupant and live in the home. And most lenders, if they are going to finance a home for an investor, they're going to require that you get a conventional loan and you put down minimum of 20%. Another advantage of the conventional loan is that you don't have to worry about those strict requirements of an appraiser coming out and it meeting certain safety inspections and requirements. So that's another great thing about conventional. Now there's 2 other loans that are most common. You have your veterans loan, or sometimes called the VA loan, which is used for our people in the armed forces. And your lender will finance 100% of the loan for you, and you don't have to put any money down. Also with the USDA loan, those are for people who want to live in rural areas. The lender will finance 100% of the purchase, and you don't have to put any money down. The only disadvantages of not putting any money down on the veterans loan and the USDA loan is that you don't build up any instant equity, because as soon as you put a down payment down on a home, that comes off the purchase price and you build up equity immediately. Now, those are the 4 main types of loans. There's also a loan called the 203K loan, which is a rehab loan where the lender will finance the loan for a buyer who wants to do any repairs to get the home up to par. And there's other programs that are available, but you want to be sure to speak to a lender. If you have any questions, or if I can refer you to some great lenders that I work with, I'd be more than happy to. My name is Cherilyn Williams, and I'm with eXp Realty, and you can reach me at my phone number at 630-723-8845. I hope you have a wonderful and blessed day.